Today, you're going to be learning about the three core elements that make up a highly probable trade setup: context, framework, and institutional order flow. By the end of this lecture, you'll know how to build real trading narrative, identify institutional order flow, decode context, spot highly probable trade entries, align with time and price, and avoid false setups. Please like, comment, and subscribe. Okay, we're not going to waste too much time. We're going to get right into value because I want you guys to focus on what's important and not focus on what's not important. And this is going to be one of the most important topics with building true foundation in any asset class. This is all smart money concepts. I'm pretty sure you guys are familiar with the different concepts floating around on different social sites, but I'm going to bring it all together for you so you can have something to build off of. This is the foundation. Like right now, we're building a home, and this is us building the foundation for that home. So this is important that you absorb all the knowledge that I'm giving you so you can be able to apply it. And everything that I'm going to show you today is something that you can apply in any asset class in any time frame. This is how I educate the people. Also, I want you guys to back test this and please have your notes. Please take notes. So the first thing we're going to get into today is what makes a highly probable trade setup. And one of the things I'm going to discuss with you guys that I feel like that's not necessarily put out in the public as much is how to frame that out, how to find true institutional order flow, and how to find context. So the first thing I want you guys to realize is the foundation of how we trade is literally this, right? So the three pillars that we have here, one without the other makes the whole trade setup lack a lot. Meaning, if you look at it in terms of numbers, institutional order flow makes up 33.3% of a key trade setup, right? And framework also makes up 33.3% of the actual trade setup. If we go to context, also it's divided within 33.3. So now, playing the numbers game, if we lack one of the three pillars, we literally decrease our chances of having a trade setup by 33.3%, leaving us with 66.6% chances of having a highly probable trade setup. We're all about optimizing the opportunity for the trade setup. This is why numbers count. So say if you lack context and you lack institutional order flow, so you don't have one or the other, now you just decrease your chances of having a 99% trade setup to a 33.3% trade setup. I would rather focus on the 99.9% percentile for any trade setup. If I was to gamble my house for a particular trade setup, it'll be me leveraging all three of the pillars so I can optimize my entry at all times. That being said, let's move forward so we can discuss how that looks on the chart, right? And one thing that I will tell you is context, framework, institutional order flow builds narrative. So that's one of the key aspects of what we're talking about right now. So please take notes on that. Another thing we need to focus on is what is true time and price. Time and price itself is essentially what this is, right? Aligning our trade entries up with what price is doing and what time it is. And when you're able to do that, you're then able to find a key trade setup. So the first topic we're going to get into is institutional order flow. And why is it so important? Institutional order flow sets the foundation for how we get into these setups. Without institutional order flow, you're literally going to lose the trade setup before you even start. I feel like this is why 90% of traders fail their prop firm challenges, because they're not aligning themselves with institutional order flow. So one of the key aspects of what I think institutional order flow is that I think is the most important is directional bias. As you can see here, we have it marked on the chart. Directional bias becomes very important when determining what we should be doing in the market, right? And also seasonal tendencies. This is what makes a lot of traders become stuck in the trading cycle because they tend to not focus on one particular strategy. And then when they do find a strategy, because it goes through a losing season, they leave that strategy and they try to find a new one. But what they do is they basically get back into the trading cycles. Instead of focusing on one strategy, they move into another one. And this is what caused them to stay stuck inside a failing state. So market sentiment is more so the intentions of the market, and multi-time frame alignment is also very important because it shows you how you can bring everything together to where you can make the most optimal entry. Now, there's two ways that you can figure out how to find directional bias / institutional order flow, right? One way is you can do it manually, right? So I'm going to show you how to do that manually, or you can do it automatically. I'm also going to get into how you can just do that without having to go through all the breakdowns and the time it takes to find true directional bias. But the main takeaway from this particular slide is understanding that us as retail traders, we only need to trade in the directions of institutional order flow because that's what the institutions are doing, and this is how we're going to be able to make our money. We're going to capitalize off their movements, and when you can capitalize off their movements, then you're able to stay in the profitable side of the trading aspect. So the first thing I want to talk about is smart money reversal, right? This is bullish institutional sponsorship and bearish institutional sponsorship. Every reversal has a division, right? You have the buy side of the curve and you have the sell side of the curve, right? This is the foundation of how the market works. So please take notes. The buy side of the curve, you should be understanding that there should be a support system, right? What's the support system, right? The order blocks, the bullish order blocks in that direction should be supporting price, and also fair value gaps should also support price, right? So I'm going to show you what that looks like on the chart. It's essentially the same thing for when you're going in the bearish direction. The bearish order blocks in the fair value gap should support price. This is very important because it's the telltale sign that if these PD arrays are supporting price in that direction, it literally lets us know that the institutions are pushing price in that direction. So I'm going to show you how that looks like on the chart. Here's a perfect example, right? So everything that I'm going to show you is going to be live trade setups, or it's going to be like just from like current price action, because I love to be very, very transparent and show you guys how things look in real time, because that's true information. So as you can see here, here's the actual illustration that we was looking at, and you can see this is the same exact thing. As we split price in half, right, which is every pricing model has where there's a market reversal, there is a split between it where it is buy side institutional sponsorship and then sell side institutional sponsorship. So essentially what happens is, without it, right, we can look at how this down close candle, right, which is an order block, was the foundation for this move, right? It's the origin of this particular move. During this move, we see that price literally traded above that order block, found some ground, and then it surged up. Now, here's why this is very important. We noticed that there was a true fair value gap formed here after the break of this order block, giving us true intention that the institutions want to push price higher. So what is the second confluence that price wants to stay in the bullish state, right? The fact that the next particular order block that was created here, right? This particular order block that was created here, right? This order block, down closed candle, right? That order block was created there. Price traded above that and it found footage, right? It literally stagnated for a while, right? And this is letting me know that prices do have the intention to go bullish. But when do we know that the market wants to reverse, right? This is what we call smart money reversal. As price then trades lower and taps into this area, come back up here, which is breaking that order block, right? This is literally the first indication that the market is being stagnated. We understand that the order block is supporting price, the one we have here marked on the chart. But when it broke below that, we start to see a change in state. So now as price then come down and then it breaks below this particular order block here, this was the change in state delivery. And as you can see, price then continued to go down. Now, institutional sponsorship is showing the reversal as far as these order blocks, which is bearish order blocks, are now going to support price. And as you can see, price being supported by bearish order blocks, and then it continue to keep going down. As you can see, it's no different here, and they just keep going down, right? This is literally what institutional order flow is, right? So now you understand that from a different perspective. Let's go into another example. This is a bearish example, which is no different. As you can see, there's the actual split in price. Of course, this is the buy side of the curve over here. This is the sell side of the curve over here. And as you can see, the bullish order blocks have support price to go upside. Go upside is keep climbing. We don't see price come down, right? We're seeing it support. We're seeing these order blocks support price. So we know that we're on the right side of the market for bullish activity. And as you can see here, price come down here and break below this area, right? And as price broke below that area, it quickly got back in the above the order block that was formed there. Just letting us know that institutional order flow is still bullish. And as you can see, price come down here, continue to keep breaking up, supporting bullish order blocks, continue to keep supporting bullish order blocks. Here's where we know that price wants to have a smart money reversal. As it breaks below here, the last up close candle for that order block, which is the green one that I got marked red here, you then see that there's a change in state delivery right there. And guess what? Now we got a smart money reversal. This is an actual entry, as you can see here, that I took on my live account. All my trades are on personal accounts. I trade live every day with my community, and you guys are here, so you can see that this is actually a trade setup. You guys probably can go back into the section and see that it's there. But this is where we took that trade setup for the sell-off, as we spotted that first market reversal, and then we waited for a fair valuation to be met, and it continued to keep going down. And as it broke below, as you can see, this order block that was formed here, it's shown true intention that it wants to continue to keep going down. Came back, offset the actual retest, and then continue to keep going down. Beautiful price action. This is the bearish smart money reversal example. Let's get deeper. Let's get further, right? We talk about let me see what's going on here. All right, so here's a bullish example, right? So no different here, guys. As you can see, price came back over here, broke below there, right? The bearish order block supported price. Price literally came above there to come back down, and it came up again to come back down. This is true institutional order flow, guys, at its finest. Came back up here, supported that order block there. As you can see, rejected to go down. Came up there, down, right? So the moment that price played and it showed true market reversal, which was here, is where we seen that there was a change in state delivery there. And it showed that now the market reversal, as far as what institutions wants to do, is now when they go bullish. As price came back down, it retested that area, came back up here, retested this area, and then went back up. This is a beautiful trade setup. Like, right, as far as understanding institutional order flow and now allowing price to trick you before you even get to the market. So now let's talk about models, right? This is bullish institutional order flow. And what I want you to understand about bullish institutional order flow is these are what we call low resistance liquidity runs, right? These are when the market itself is the best. This is where you're going to make the most money, right? Low resistance liquidity is like literally where the market has low resistance to your trade setups and everything look clear. There's fair value gaps being left open. There's strong engulfing candles getting from one point to the next. These are low resistance liquidity run conditions. And I'm going to speak on that in the next lecture. But we're going to focus more so on bullish institutional order flow now, so you can build a foundation around it. So in situations like bullish institutional order flow, you need to focus on what we talk about, like in the previous slides, the support of bullish order blocks, the support of fair value gaps, not being violated as much, maybe a fraction of the fair value gap being violated while it's still going in that direction, right? So more so the consequential approachment, 50% of that fair value gap is holding, and this is true bullish intent. So as you can see here, this is what it looks like on the chart. As you can see here, there is strong engulfing going to the downside, but then when it broke, guess what? Price did not want to go back down below that order block, and it did momentarily before it shot back up, right? Then it came back, shot back up. Essentially the same exact thing, right? This is the same exact thing. This is true bullish institutional order flow. And as you can see, we're finding our entry here, and this was a potential entry in the past, and market continued to keep going up until it shows that it want to go bearish. Here's the bearish example. As you can see here, our job is to align market dominance with bearish institutional order flow, and that's the same thing we talk about here. You want to find a way to see how price reverse, right? And it's essentially what happens is you want to trade in directions of the trade in the same direction of institutional order flow. So no, essentially the same thing that we spoke about earlier. But here's the bearish example of that. Now let's continue on with a live example. And as you can see here, here's a live chart of us showing how the bearish institutional order flow looks and low resistance liquidity running situations. Beautiful, beautiful trade setups. This is a market condition that I feel is very underrated. I feel like this is the reason why most people fail in trading, because they can't identify what this market condition is and how it starts, right? Figuring out what it is before you even engage into it will save you a lot of money. So this is what I call equilibrium. Now, equilibrium, people get it misconstrued. People think that equilibrium is just the midpoint of the 50% of the PDRA matrix, right? But I'm going to challenge you to research more into what equilibrium is, even based off what SMC traders say, off ICT say. I want you to look at equilibrium as if it is a phase in the market, right? A phase. Box it up as a phase. What is a phase in the market, right? This phase in the market is the worst phase. It's what we call high resistance liquidity, where price struggle to get from one point to the next. The fair value gaps are being disrespected. The order blocks that I just showed you on the previous charts are all being disrespected. There's no true defined direction in the market. And I bet you, if you go back and you look at all your trade setups, I bet most of your losses came from situations like this, when this is the market conditions of a high resistance liquidity run. And this is where I call equilibrium. This is the first phase of when the market is formed. And the main takeaway from this is a balanced market is a market that we cannot make money in, because there's no true imbalance. The only way you can make money in the market when there's an imbalance. That imbalance is when price actually manipulates and it delivers from one point to the next. And further inside the lecture, I will show you how that looks. But this is the foundation of literally most people losing in the market. And I'm going to show you how this looks on the chart. And as you can see, this is horrible price action. The order blocks, as you can see on the book in a healthy market condition, low resistance liquidity liquidity conditions, you see price surge in one direction. But now you're seeing price get violated in every direction. Like there's no true, there's nothing being held, right? Everything is being violated. Order blocks, fair value gaps are, they're choppy. You got wicks all over the place. Things like that are not the best market conditions. As you can see, this is crappy. I challenge you to go back and look at all your trade setups. I bet you lost most of your money during these time periods. So this is what we call equilibrium. Some people can call it consolidation. It's different terminologies out there, but I call it equilibrium because I understand the meaning behind it on a institutional level. Equilibrium itself is more so being imbalanced, right? Having that balance. And I know that the market itself, it aims to balance out. So it's how it have ups and downs, left or right. It has imbalance and unbalance, and it create expansion to be able to balance out. And during these times are the worst times to trade in the market. So please take notes on that. So here we're going to discuss a more algorithmic way of determining institutional order flow and directional bias. This is an indicator that I created to help me literally save time, money, and efforts. Right. So I think trading is all about optimizing your system and figuring out a way to create efficiency. And I think this is what helped me do that. So versus me trying to figure out everything I just showed you, which is I can't do that without this, but it makes it a lot easier for me. Or I add it as a confluence of what I already know. So either way, I take that approach with using this indicator. Um, but the thing is, this indicator can literally save you so much time to where you just come to the market and you see this and you understand that you are aligned with institutional order flow, right? So as you can see here, it's designed for smart money traders to actually think about how price is moving. And if you're aligned with it, it will increase your chances drastically. And I'm going to show you how that looks on the chart in a second. But the first thing I want you to look at is who is this indicator for? Struggling traders with directional bias. If you have a struggle with directional bias, which is 90% of people out there, can't understand what the trend is doing and what direction they should take, this will help you out. If you in a prop firm traders, prop firm traders, we do research, you start to realize that 90% of failed traders that lose these challenges are traders that don't trade in a direction of institutional order flow. So it's like you literally you're taking these trade setups with all these different concepts and strategy application, and you're failing because you're not aligned with the true direction of the market. So this is going to help you determine how to find that. And it saves a lot of time. Like I say, I can put this up and automatically know, all right, everything is bullish right now. We are in a bullish state. I should be looking for buys, right? That's going to increase my win rate drastically. Now, this only act as an added confluence, guys. It's only an added confluence. So this is why it is very important. And why should you use the institutional order flow directional bias indicator is because it's an instant understanding of what the market is doing. It just saves you that much time. It gives you true insight of what the institution wants to do, and then you can just align your trade setup with it. So here's an example of how that looks as far as what I will look for. So if I was a trader who want to come to the market, I understand that if I have a buy position that I'm trying to look for, my institutional order flow should be bullish in a bullish state like this. I'm looking for a trade setup. If I want to buy in this condition, it will give me 85% chance that it will work out for me, right? Based off metrics and numbers of my own. Same thing if maybe I see this on the institutional order flow indicator, I may decrease my chances of having a trade setup because the fact that it's not solely that much bullish, because you have some time frames that's not aligned. And as you trade lower, you literally lose a percentage as far as your percentage of the highly probable trade setup, because now you're trading in equilibrium, right? This is why I have it marked here in the chart. And when you're trading in equilibrium conditions, you should not be trading. These are consolidating conditions. It's not a defined determination of what we should be doing. Now, if you have a situation where half of the chart is bearish and the other half of the chart is bullish, you then can trade in that direction and have a trade setup. Now, this is literally bearish conditions at this point. I would not try to take buys in this condition. And believe it or not, a lot of you traders are taking buy models in this condition. And this is where you're going to fail at. Same thing with this one right here. I feel like you should only be looking for sell entries in this type of condition, because the market itself, the institutions itself, is pushing price down. They're pushing that price lower. They're not buying. So you should not be buying against this type of activity, or you're going to lose. So that's essentially what this is, and we're going to get into how that looks on the chart. Here's a live example of a trade setup that I took in my community, in my Discord, where I literally I used the institutional order flow indicator to save me time, and I aligned my entry model with it. And as you can see, it tapped and almost take profit. We literally got 3R, and as you can see, I secured profits at different levels. This was a trade setup we took earlier this year. So this is essentially what happens in the market when you align the institutional order flow indicator with your intent. I don't have to do as much to be able to come up with an optimized trade setup. Setup. So, So now that we cover institutional order flow, right, which is the foundation of our home, now it's time to build the walls, right, which is what we're going to call this is framework. Framework is just as important. Is just as important as institutional order flow. Like I told you, it makes up the 33.3% of the trade setup. So here's how you find framework. What is framework? Every trader has their own set of rules with building framework, and this is where we struggle the most at. Because if I can tell you that my framework is this, and another trader tells you otherwise, then now you're stuck in between the two. So this is literally the way that you can frame out the market, way of using SMC concepts. So essentially, you look at manual or automatic, right? I'm going to show you how that looks manually. As you can see down here, there's some examples of how framework looks like, right? Liquidity injections, you got like micro and macro timings, liquidity cycles, which is something that I speak about a lot, right? With the price delivery sequence, you have previous day highs. These become things that people aim for targets. Weekly profiles, these are also important. Peter matrix, right? That's like, overbought, oversold conditions, buyers or sellers, more of a supply and demand type of approach. Session times, which is what we call time and price. Data backed market daily ranges, right? This is something I leverage, right? To determine market exhaustion and things like that. And also daily algorithmic models. This is my exclusive way of looking at a framework, and that's very exclusive. That's like only in my inner circle can see how that's being used. But as you can see here, I also have a automatic way of framing out the market, and I share that with people inside the space. And if you're part of the community, you can get access to this particular indicator. And when I use the word indicator, I use it lightly because naked chart traders rely on figuring out how to get inside their moves based off signals from indicators. This is not that. This is literally just something that analyzes the market for us, and it gives us a true understanding of what it's doing so we can take advantage of it. So let's get into how that looks on a chart, right? With leveraging framework and finding it automatically, right, with the indicator. As you can see here, this is another trade setup that I took. This is on the sell position I took inside the community, USD CAD. So I trade futures and Forex. So, it works for any asset class. As you can see here, one thing that we will determine what makes our framework works, right, is the fact that you aiming for sell side liquidity. So something as simple as that can be your framework, or you can say there is a liquidity pool here that left buy side liquidity was swept, and then we're going to take that sell. That's a possible way you can kind of look at how to frame it out. But essentially, most of the time, people come to the charts as beginners or just your level of thought, and it can become very subjective, right? Because it's so subjective, you can be stuck inside the gray area. I don't want you there. I want you to be more refined. I want you to have more understanding. Your trading need to have a black and white approach, not gray area. You need to be simplified and have true understanding of how you should be trading, not me being in a state of confusion. So let me show you how the framework analyzer can show us that. So this is the PDRA matrix. This is framing out the market by way of using the PDRA matrix, right? Which is, I can then say it's subjective because some people would say take an entry at the equilibrium, which is here at 50%. You're going to sell off at that particular area. This is the same exact entry, the entry that I took. But if I wanted to use PDRA matrix, this is what it looks like. This is how they manually frame out the actual move itself. This is what we call the market maker model, right? Market maker sell model. As you can see, buy side of the curve, you got the different phases of the market, smart money reversal, and then the market trades lower, right? And then we break it up in phases in the market, right? This is the way that people market maker model frame out the market, right? Which is, it can come off being subjective too, based off how you emphasize phases. Now we're talking. This is the framework analyzer, right? What this is literally an indicator that I developed. I was inspired by the ICT everything indicator. I seen that they had some features that I actually use for a short period of time, but then I created my own indicator that's hinged to how I trade and how I look at the market. So my indicator have different things that people don't necessarily focus on, and I think this is one of the easiest things to understand with trading, and that's like style, right? So essentially, agent session, like session timing, kill zones, liquidity injections, target areas, these type of like variables create a optimal trade entry. And so now I'm going to show you that the framework analyzer have helped many of my students out and also myself. But this is a indicator that I created and it's available to the public. If you want to get access to it, of course, join the community itself and you'll see how well it works out, because I trade live with it every single day. So as you can see here, there is a London session, which is the kill zone London session, create an expansion move. The expansion move then took some type of fair valuation to be met here. Then we seen stagnation of price. Now in New York session, we see the reversal happening there during the New York close. And then we took an entry just at the brink of that level. As you can see, that brink of that move, we came back and we saw more fair valuation. Then it sold off, right? It was a clean, nice trade setup. As you can see, we got out right here when price tapped right into the take profit level we have marked, right? This is inside the indicator. I'm going to show you how powerful these levels are. These levels aren't just levels. These are data-backed levels of every model that you guys are going to run across, and you're going to also see it works for every pair. And as you can see, this is literally how I trade with the framework analyzer. I don't have the session times. I take it away, which is optional. I just use the agent range to build foundation, and I build off that, right? And that's how I build. That's how I frame out the market itself, and it works well for me. This is how I won my first trading competition, and I'm just here to show you guys my success, and hopefully it can help you out. So here's where there's levels in the trading, levels in the indicator that actually you see how price really reacts from it. Literally tapped into that level and fell off a cliff. This is why these are very sensitive. We use it as take profit levels or reversal levels. And here's another example of a previous, target area that was tapped. And as price tapped into that area, you see price lost exhaustion. It did not want to break below that area. And this is why we use this as a take profit level and sometimes reversal level. Like I said, you can get access to this indicator inside of Discord. So now that we covered institutional order flow, right, which is the foundation of the home, then we covered framework, which is the walls of the home. Now it's time to talk about the roof. This is like one of the most important ones because it talks about our entry model itself. You're introducing yourself into how we actually enter in the market, more so refinement and things like that of that nature. And we're doing everything to build narrative. Everything that we're doing in this particular lecture is to build narrative, right? How does institutional order flow, right, like context, framework, all come together to build narrative? That's all this is. And as you can see, what is context, right? So context is very important. It's to make it or break it in our trading. So here you have smart money concepts and you have traditional price action. Here's where we became so depotent when it come down to actually trading, right? We lost the ability to read price action because we solely focus on SMC concepts. So meaning when you guys came across someone as great as ICT or someone maybe that learned from ICT or whatever it is, you then start to focus on just the concepts itself. So concepts like order blocks, fair value gaps, inversion, inversion, fair value gaps, breakup blocks, mitigation blocks are literally, SMC education that gives you a robotic approach. They work very well, and I appreciate ICT for giving us language. He gave us a true language to understand the market. But the thing is, we became so robotic that we then forgot about the understanding of feeling what price is doing, like getting a feel for what price action do. And that's not developed through just illustration, right? That comes in screen time. That only comes when you get into these live entries, here and there, when you find true understanding of how the market is moving, and then you combined it with smart money concepts. You join them together and you have this highly probable market execution, because not only you evaluated the trade setup based off smart money concepts, but you layered it with true context, right? Traditional price action, wick creation, momentum candles, and engulfing candles, price action, like reaction times, like, right? When you look at price from this perspective, it literally increases your chances of having a highly probable trade setup substantially, right? This is what catapult my trading journey, right? I wasn't just an SMC trader. I was an SMC trader that understood price action. And that was the big difference between me and people who trade the same concept as me. I'm going to not get in the trade setup because it don't look right. It don't feel right. Something don't feel right about this. What makes it not feel right? And like I said, this is something that's developed in time, right? You will get to that level if you continue to have live trade executions, and you see, or you might participate in seeing someone else trade live. You will start to see price action have a certain type of reaction, and then you will start calling it yourself. So here's how context look on the chart, right? What is context? We're going to use an example. Here's a buy model. Here's one of the buy models that I trade. I don't trade it often. I feel like it's very elementary, but it's something that someone can trade, right? So as you can see, this is for the beginners, not necessarily someone of my nature, but I'm pretty sure that someone can build something from something like this. So essentially all it really is a fair value pullback. And what it looks like is this is like an optimal fair value pullback. And for those who know, I always talk about this, but the fair value pullback is the easiest trade setup to trade. And I feel like because of that reason, it decreases the chances of having a probable trade setup, right? It does work, and I think it will work for someone, but I feel like there's more advanced entry models that we trade that works even better, right? A lot more accurate and more profitable. So that's essentially what this is, and we're going to look at a live example of us showing you how that looks with true context. So there's the buy model we have here, buy model 3, which is the fair value pullback. As you can see, there's literally a reason to get in this trade. It's literally the same exact model we have here in live time. Everything I'm going to show you is going to be live trade setups and just on live streams. As you can see, sell side liquidity rate. There was a low created here within this range. There's a fair value gap that's there, and there's the order block is at the foundation of the move. So now, essentially, the model itself is saying that when you come in this area below this fair value gap, that above the order block and below the fair value gap, you then take the entry. So our entry was right here, right? As you can see, it failed. Price literally fell through the roof, through the floor. It took you out fast. Why? So why wouldn't this trade setup work out? Because this trade setup is focused on no context. You literally just traded the actual concept, but you didn't trade it context. Understanding that if you was to join them together, you would have known that, well, this was a rate on liquidity here for buy side liquidity, right? Right. This is you looking at context and not just concept. And then before you took this trade setup, you would have thought like, all right, let's look at how strong this move came down here, right? Let's look at the fact that there was a build up in price here. Engineering of price, this should be an area where you may expect some type of like a reversal. But at the same time, the rate on liquidity and the fact that it was took at 8:33 p.m. Eastern time, which is Asian session, you should know that this is not the right time to take the trade setup. And that's essentially what happened at that particular time period. And this is why that trade setup failed. Now, let's go into an example of us using context, right? With the context and with true concept, right? So, as you can see here, price then is the same exact entry model that we took from the last trade setup, but it worked out well for us. Only because we sat back before we took the entry, we noticed that there was buy side liquidity waiting to be rated. And we also seen that it was around the right particular time of day, right? 11 a.m. is a time that you can trade this particular model itself, and it works out well, right? So that's a plus. And we also understand that here, this move here, right? This down close move here, down close move here, the three-way reversal was already initiated. And we also see there is true order block support here. So these are different things that we're considering, right? This wick reached for this particular level itself here, as you can see, is marked red for a reason. And that's more advanced information, and we will get into that further inside the lecture. But as you can see, as price came back and tapped into that wick, it left relatively equal highs, and it became literally a direction to take. And this is where the entry worked out real well. And this is when you use entry with true context. So that being said, we covered everything about the foundation of trading. This is going to be one of the most important videos that you watch, because it's going to build the foundation. Like I said earlier, like you want to be able to have something to play off of, right? So this is your game plan. If you come to the market and you don't have an alignment with these three pillars, you're literally putting your capital at risk, and you're going to continue to fail at this, right? You need to take this serious, and you need to apply this. Everything I teach you, you need to go back and back test for yourself and ask yourself, does this actually work for yourself, right? Does it really work for yourself? And that's something that you need to go and consider. The homework for today consists of chart review, 15-30 minutes, confirm institutional bias, and reflection prompts. Please like, comment, and subscribe for more trading education. See you in the next lecture.